let's put the spotlight then on an earnings update coming in as far as Godrej Agrovet is concerned. That's the one to watch out.
Absolutely. Let's take the questions to the management of Godrej Agrovet. We have Mr. Balram Singh Yadav, who is the managing director at Godrej Agrovet, joining us on the show to talk about the quarter gone by for the company. Very good morning to you, sir. Thank you so much for joining us on ET Now. And yes, no doubt, we've been wanting to talk about your earnings. But before that, let's talk about the government's focus on boosting consumption and promoting agriculture and the allied sectors, given the fact that the focus is very much visible in the budget document. So how do you read this development and its impact on the industry and your company in particular?
So we are very, very enthused by this money given to the middle class for boosting consumption, because we believe that as nations and people become rich, they consume more of animal protein, fruits and vegetables. So their quality of nutrition improves. So we believe that this is very good for the animal agriculture sector as well as for value-added and packaged food products.
All right, then let's talk about your earnings. Let's talk about the animal feed segment first, because that contributes to 48% of your total revenue. That has reported a muted revenue growth coming in. You do have margins that have expanded to 6% though. So what led to the muted revenue growth? And what you're looking at in terms of the margins, do you see them being sustainable with this kind of expansion?
So I must say that there is volume growth, but the value growth is not there. And that is because of benign commodity prices. And that is one of the reasons why the profitability is also improved. I think just because of very good Kharif, the raw material prices have not risen. That has resulted in the prices of output not going up, even though volumes going up, but the profitability has been extremely good. We believe that it is sustainable because we are also expecting a very good Kharif, very good Rabi, sorry. And in case that happens, the raw material prices are likely to be muted, and that will definitely be good for our profitability.
Let's talk about your crop protection business, because that one was actually impacted significantly in the quarter gone by. We saw the revenues declining as much as above 42% or so. Are you envisaging that this could reverse in the quarter that we are in currently, that is in Q4?
Yeah, so the Q3 was not good because of a very bad ending for pesticides and herbicides for the Kharif season, even though the crop was very good, but because of very less sprays towards the end of the season, we were left with stocks which we took back immediately. And we believe that Rabi is shaping up well. We are likely to have extremely good Q4.
All right, and since we're talking about the crop protection business, then talk to us about the fertilizer subsidy impact, because that was marginally reduced. What kind of impact then are you penciling in?
So, as you know, in the budget, the fertilizer subsidies have been marginally reduced. And I think that is a step in right direction, because there is overuse of fertilizer, which is causing a lot of soil degradation. And I strongly believe that some measures in this direction, where prudent use of fertilizer has to be promoted. Unfortunately, the process is very slow, but I'm sure in due course, it will yield the desired result.
Right. If you talk about on the consolidated basis, your revenue is still down about 2.5% for the 9 months of this financial year. Do you expect to cover up all of that in Q4 and surpass the FY24 levels, or what sort of a trajectory are you expecting on that particular front?
So I must tell you that Q4 definitely we're expecting revenue growth as well as profit growth. But I must also tell you overall for the year, the revenue will marginally grow by about a percentage point, but we will have a significant growth in profitability. I think one of our problems in past has been the volatility of this business. We have taken several measures to improve profitability, to expand margins, which are yielding results now. If I give you some data for the 9 months ending in FY23, our EBITDA margin was about 6.7%. And if you see current 9 months, the EBITDA margin has expanded to 9.4%. And I think that has been the focus of the business, to become more stable, consistent, and that is showing up in our profit numbers. As far as top line is concerned, a lot of effort is going in to get volume growth in most of our businesses. And as the quarters pass, you will see that also showing up in our numbers.
All right, Mr. Yadav, I also wanted to talk about your guidance then, especially when it comes to the margins. What do you see in terms of financial year 26? Do you expect your margin guidance to be a little bit better for the financial year 26 then?
I think that margins will definitely sustain. To my mind, whatever we have done for margin expansion, that is correcting our cost structures, focusing on value addition, etc., is yielding results. We can see those in numbers. We just have to get back to 10-11% top line growth, which we will show in FY26. I am very sure margins will continue to be in high teens next year also.
Aztec Life factory that reduced the losses in the quarter gone by sequentially as well as on a year-on-year basis as well. And this largely was driven by higher CDMO volumes. Do you think that this sort of a trend will be sustainable going ahead?
Yeah, so we were a generic player and we had really good time in Aztec. It was one of our most profitable business till the global meltdown in chemicals happened. The generics are really causing a lot of trouble to everybody, including us, because the prices have really collapsed. And we changed focus about 3 years ago, set up a R&D center so that we will focus on CDMO. And I think that is yielding results. You can see quarter-on-quarter growth in our CDMO molecules. It takes time and it takes more time when the markets are not very good. We are very sure that as we go further into FY26, our margins will definitely improve, largely driven by the CDMO molecules we are likely to get into and launch in the next year. My view is that with the current tariff coming in from US, we believe that the agrochemical prices, whether it is generic or otherwise, will also improve, and that will definitely give us some respite from what we have been going through for last few quarters.
All right, Mr. Yadav, thank you so much for joining in and talking to us about your earnings fine print and growth roadmap. But